Good morning, Paul Georgie from Allendale. It's April 4th, and it's Wednesday morning. We've got a little bit of profit-taking this morning in the grains. Beans lower, wheat lower, corn is mixed. The main thing that I think has impacted investors' attitude here was the FOMC meeting yesterday, the minutes that came out from that meeting, and they didn't mention anything about a QE3, and that's got the trade nervous, thinking that that we will see some tightening, and therefore they're backing off, taking some of the profits off the table in the soybeans especially. That news yesterday caused rally in the dollar, caused the crude oil to weaken, and we've seen some adjustment there in the grains. And I think that follow-through attitude off of a very overbought market in the soybean complex and in the nearby corn certainly has given us some reason for some profit-taking here before the long weekend. But when you look at all the other news, traders still are going to have a very strong bias to being long soybeans and along the old crop corn as we approach the USDA's supply-demand report next Tuesday morning. The trade feels like we don't have any reason to worry about being long. Things are going to have to tighten. The USDA are going to have to adjust numbers. Well, last year they didn't adjust numbers when we had quarterly stocks numbers that were lower than expected. So be aware of that and be cautious as we go into this USDA report next Tuesday. Weather forecast overnight have warmed up a little bit, you might say. They've taken a little bit of the extreme cold. The two models, the Euro and the GFS model, have come closer together on their assessments and forecasts, not projecting quite as much cold temperatures as earlier thought. So that could be a little bit negative to the new crop corn, especially as planting continues at a very good pace there. Other news is the spreading between old crop and new crop, continuing to be massive volume in old crop, new crop corn spreading and corn soybean spreading as well. So those are the factors that are moving prices around more so than net positions right now as traders are getting their positions in the month that they want them in. And also we're seeing some fund rolling. We had the Deutsche Bank roll started here. We've got Goldman roll starting here very soon. So those kind of things are causing some excitement in spread markets more so than in flat prices we've seen here in the last few days. In the livestock trade, we've seen cattle futures sell off hard yesterday, drug the hog prices down as well. Cutout values sharply lower again yesterday, down $1.70 plus in the both select and choice box beef. We had cash cattle trade yesterday, a few cattle anyway in the south trade as much as $3 lower at 122 versus a 125 market last week. I think what's going on in the livestock complex right now is the demand side of the equation on beef especially is being hurt because of high gas prices. The hope there is that we can see some summer cookout season get started earlier this year and help support some of the cutout values by using higher price cuts. The other problem that we've got is at the mercantile exchange, where you see fund liquidation. You also see margin liquidation that because of this continued pressure that we're seeing in the cattle and continued slide, causing longs to liquidate, and that's pressure in that market as well. So expect to see some more very volatile markets as we move into the last trading day this week. Tomorrow, Friday, we're closed because of Good Friday, and then we come into to next week with a crop report the potential for cold or cooler temperatures moving down into the central Midwest. All of those factors are going to keep the market supported, we believe. So look for some choppy trade and continued movement in the spreads as we go forward here in the next 2 trading sessions. If you got any questions, don't hesitate to give us a call here at Allendale at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.